Now, here is Ticky Fullerton on Your Money.
Hello there, I'm Ticky Fullerton, every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. They are all over the world at the moment. Coming up, our Trade Minister, Simon Birmingham, joins us to talk the latest tension around our coal exports to China and whether Australia still sees any opportunity at all in Brexit. Former competition czar Graeme gives us his views on how the big banks have responded to the Hayne Royal Commission, and it's not pretty. And we ask him about his new role leading the capability report into regulator APRA. And look, high drama on both sides of the Atlantic as Donald Trump is defeated by Congress over using emergency powers to build his wall. Professor Ed Blakely fills us in there. And in Europe, Theresa May to ask Europe for a delay to Brexit withdrawal. Will it ever happen at all? The Australian-British Chamber of Commerce's David McCredie back to answer that one. Well, let's hit that first. British lawmakers have overwhelmingly supported a bid to extend the Brexit deadline until at least the 30th of June. The bid was to extend Article 50, was won by 412 votes to 202 in the House of Commons.
The ayes to the right, 412. The noes to the left, 202. So the ayes have it. The ayes have it. Unlocked.
The ayes have it. It gives MPs more time to flesh out a new deal guiding Britain's divorce from the European Union. Labour leader Jeremy Corbyn is now ramping up pressure on MPs to back a second referendum on the issue. As
the whole purpose ought to be to protect communities that are stressed and worried. Those people are worried about the future of their jobs and their industries. Our job is to try to meet the concerns of the people who sent us here in the first place.
British Prime Minister Theresa May is under increasing pressure, of course, to come up with a solution after a second failed attempt. Well, the sterling, unimpressed with the decision, retreated after the vote. For the latest, I'm very pleased to welcome back David McCredie, CEO of the Australian-British Chamber of Commerce. He's been guiding us through the week's events, knows more about this stuff than anybody else in Australia, I think. David, what an incredible week. But there's a video, I think, doing the rounds of repeat 100 times. Theresa May said there will be a withdrawal on March the 29th.
Yes. And
there will not be.
We will see it. Well, the interesting thing is, still at this point in time, the UK legally will leave the European Union on the 29th.
She's calling for a delay now. She's changed her tune.
She is, and she hopes that she can secure that, because at this stage, because nothing else has passed, we have the situation that the UK is staring at leaving on the 29th, despite the Parliament clearly voting last night not to do that, and has done that repeatedly, actually. There's the second time that sort of vote has been put to the House. They're only indicative votes, though, so they're not binding.
Yes.
But she was determined up until now to make that work. Now, there's still a window of opportunity if she can get a deal passed before the 20th, which is next week. So what has
exactly happened now? We've had this vote. Now it is for what? The Prime Minister to ask for a withdrawal, delay to withdrawal of Europe?
So, under the terms of Article 50, the UK is able to ask for an extension. The other EU 27 countries have to agree to that.
Unanimously?
Unanimously. So Nigel Farage was very vocal yesterday, saying, now that you've voted this way, I'm going to find the one leader who will veto it, and I will be doing my best to do that, because we all know that he's very keen on no exit, no deal exit.
No deal exit, yeah.
So, yes, it is very much coming to the cliff edge. The challenge is, the challenge that's been set by the House is either you have a deal that passes the House by the 20th, otherwise on the 21st you have to ask the European leaders for that extension. If that extension comes through, which I think there's a reasonable chance that the Europeans will support it.
A long-term extension?
Well, this is the interesting question. So there's two options potentially. One is a short-term extension, and that would probably be if there is some sort of movement and there's a view that a third withdrawal vote or third meaningful vote.
They're becoming less and less meaningful, one has to say.
Well, it was well titled at the beginning. It's probably less encouraging at this point in time. But
yeah.
So there's an option that there may be a third meaningful vote next week before that, so that if a deal is agreed, there's not the time to actually prosecute this through Parliament.
Yes.
So she would then go to the EU saying, look, we have a deal, but we need a little bit more time, and I think the EU would very happily say yes.
Yeah.
But if there isn't that movement, the question
she's got to deal with 149 votes that were she lost by, hasn't she, last time? So she's got to convince that many, or a significant number, to come her way so that she gets support for that bill. Then she can say, OK, we'll have a little delay in Europe, as you're saying, we'll agree. If she can't do that,
well, then Europe will probably look for some sort of movement as to why they should accept an extension at all. And that's been very clearly put forward by the European Union, by numerous leaders, that we need to see some evidence that you think we're actually getting towards a deal and what the UK will take in terms of steps to get to a deal. If it's a short-term deal, they want to know what that looks like in the short term.
Yes.
In the longer term, if it were to be a longer extension, then you've got European elections where the UK will have to field candidates, because that's part of the agreement of being part of the Union.
And quite honestly, they don't want a reluctant Britain in the European Parliament, do they?
Look, there's lots of reluctant European parliamentarians. I mean, ones that are there purely to vote to get rid of the place in the first place.
Exactly,
so,
including a lot of Brexiteers, I would think.
Indeed. So, well, Nigel Farage and Daniel Hannan, amongst others,
exactly.
Very much their role in European Parliament is to try and destroy.
But could I put it to you that if say, Theresa May, she doesn't get her vote up, her third meaningful vote up, and so off she goes to Europe to ask for this long extension, there are two reasons why Europe would agree to that. One is they don't want to be the side that drives the no-deal explosion, default Brexit, and blows everything up. And the second is a lot of them would actually just like to keep Britain in Europe, and so a 2 or 3 year extension would seemingly achieve that anyway.
Well, and I think this is where some of the push and shove politics of the last little while is starting to play out a little bit more. We saw last night that the House also voted down the idea of a second referendum. Interestingly, the Labor Party deciding to abstain from that vote. And
I don't think that's what I read out earlier is necessarily true. I'm not sure Jeremy Corbyn is actively pushing now a second referendum.
Well, there's certainly apparently now Labor Party policy, but it's certainly not what they did in the House last night. So I'm not quite sure how to read that, to be honest. That's clearly a leadership decision made on potentially on the run yesterday.
Exactly.
To try and exert maximum political pressure on the Prime Minister.
OK. So we'll know, presumably one way or the other, early next week, which way this is likely to head. I
think putting a timeline on when we will know anything, we've been doing this for months, I'm not... Potentially, yes.
Yeah. And briefly, from your point of view, the opportunity for a free trade agreement between Britain and Australia?
It's still there. It's still very much in play once they figure out how they leave, whether that's in the short term. So I know you've got Simon Birmingham here later. I'm sure he'll tell you what the timelines are from his perspective. And
yes.
Obviously we've got our own federal election coming up.
But we've got a no deal default. Then that's an opportunity under WTO rules.
Indeed.
But the other two.
We need to wait for the extension to finish, and then we can start
Which could be a couple of
negotiating.
Years.
Well, it could be, but keep in mind we're also prosecuting the case for an EU free trade agreement at the moment as well. So Australia is actually reasonably well placed at the moment, and depending on how long and how influential the UK might be, if they did stay in a 2 year, extend for 2 years, if the UK was part of helping the
Europe.
EU understand what an Australia-EU free trade agreement might be like, that might be useful for Australia.
Glass half full. David McCredie, thank you very much. Now, in his final report, Commissioner Hayne recommended, quote, a capability review should be undertaken for APRA as soon as reasonably practicable. The Productivity Commission also recommended a capability review of the regulator APRA. The government responded by announcing a capability review of APRA, which would commence this year. Former ACCC chairman and president of the National Competition Council, Graeme is now chairing that review. Well, what did he make of the Royal Commission, and how does he view the prudential regulator? I spoke with the chairman a little earlier. Graeme Samuel, thank you for joining me there. I wanted to ask you about how you think the response to the Royal Commission is going, particularly given the ASIC report earlier in the week on how the response on fee for no service is.
I have to say I'm getting a bit pessimistic and a bit disappointed in the response. I think what we're starting to see, initially we had a real wake-up call, and the response was of necessity, one of, yes, we've got to do something, we've got to implement some changes and the like. I'm now starting to see a bit of denial going on. It's not us, it's them. I'm starting to see some individuals who cloak themselves in a careful cloak of invisibility through the time of the Royal Commission, suddenly sort of sticking their heads above the parapets and having a look around and saying, dust has settled, well, I'll start resuming my pontifications as to what ought to be done, without accepting any culpability for their own involvement in the misconduct that was revealed by the Royal Commission. We've moved into an election mode, and as a result, neither party is in a position to actually say what will be implemented. But I'm just getting a little bit worried.
When you talk about these individuals not responding correctly, are we talking about the heads of the big banks?
Well, we're talking about, I think, both heads, but also some senior people who are being quoted in the newspaper without identifying themselves, that are really sort of saying there's a bit of pushback going on, a bit of denial. We've got even senior lawyers saying, well, Ken Hayne, he'll get his comeuppance in the courts, that the sort of things he's hoping for won't be realised in the courts. I think that the finance industry just has to understand that the Hayne Royal Commission was an outstanding examination of what's occurred over recent years, and it is years, in the finance industry. It was there set up to look at the issues of misconduct. The misconduct wasn't just, at the margin. It was horrendous. It was horrific, and it was something that really said to the community at large, we've got a fundamental cultural problem in our finance industry that has to be dealt with. And I think the finance industry needs to wake up to itself and say, well, look, we better address that. We're not going to rely upon legal technicalities. We're not going to rely on waiting for a government of whichever party it might be to be formed following an election to then pass laws. We're actually going to change things immediately. And I have to say, Ticky, that when the Hayne Royal Commission final report came out, I challenged the industry, and particularly the banks, to essentially say we will now give formal undertakings to the regulators, APRA and ASIC, that we will implement at least the vast bulk of the 76 recommendations in the Hayne report. They rejected that out of hand.
And Graeme, what did you make of Commonwealth Bank's announcement that it won't be proceeding anytime soon with a demerger of wealth and mortgage broking? They need to be fully accountable for those units before they can sell them. And what in the light of what you made of Kenneth Hayne's decision around vertical integration at the Royal Commission?
Yeah, well, look, I must say I thought the Royal Commission got it right about vertical integration. It actually went to the extent I thought it ought to go. I've never been one that says that vertical integration ought to be broken up. But I do think there are issues there of conflicts of interest, of transparency, of disclosure that can be implemented, and implemented immediately, to deal with the sorts of misconduct and the issues that were raised in the Hayne Commission. So I'm not one to break up vertical integration. I know some others are very keen on that. I think Hayne said, well, I'm not so sure that it hasn't got some unintended consequences, and he's right, I think.
But are you comfortable with the Commonwealth Bank's position that they need to keep hold of wealth and mortgage broking in order to be fully accountable?
Well, I think what's probably going to be more important is the issue of more accountability, and that applies across all the banks and all the financial services organisation. Look, there is nothing more powerful and nothing more important than empowering consumers by giving them all the information they need to determine whether they should deal with a particular organisation or whether they should enter into a particular transaction. Can you imagine a really simple law that says you shall not in business deal with a party unless you've made a complete, meaningful and accessible disclosure to that party of all information that would be relevant to that party determining whether or not to deal with you in that transaction? And you certainly wouldn't be selling too many dud insurance policies that can't be claimed upon if you disclose that they can't be claimed upon.
All right, let me move to regulators, because accountability from regulators was really a focus of Kenneth Hayne as well, APRA and ASIC. ASIC had a capability review which was done by Karen Chester a couple of years ago. She's now actually moved into being a commissioner at ASIC. Do you see change happening at ASIC?
I think it's going through a rapid transformation. It's got 4 new commissioners, 2 deputy chairs, the new chair, and another commissioner. And my understanding is, talking to James Shipton, is that all the commissioners are now firmly imbued with the process and the culture of changing and transforming ASIC. Now, you've seen this coming out every day, and part of the process, I think, is to make it clear to business and the community at large that ASIC is on the job, that it's going to be a tough cop to deal with. That's certainly coming out. Now what we've got to do is see the reality of that, and frankly, I don't envy the job of Dan Crennan, who's heading up the enforcement group of ASIC, for this reason, that he's got to deal with a court process that is complex, that is slow, that can be very expensive, particularly when you've got well-heeled defendants that are there to exercise every process that they've got available to them to game the system. And you've got judges that in many cases don't understand very complex commercial and corporate transactions and law. So I don't envy his task. And he's also got to deal with the Director of Public Prosecutions on criminal matters. But I don't think you'll find ASIC will be at all shy in referring egregious misconduct for criminal prosecution, and that has to involve prosecuting individuals. They're the ones that go to jail. Companies can't go to jail.
You've also been put in charge of leading a capability review into APRA. You've got Diane Smith-Gander and the former New Zealand Central Bank banker Grant Spencer rolling up their sleeves presumably this month to help. What can you tell us about what you'll be doing in that capability review?
I don't think it's appropriate for me to make any comment on that, Ticky, at the moment until we get into it. I have said publicly that I think that APRA's role is different to that of ASIC. It's what I call an ex ante role. It's a role that is there to see whether it can ensure that financial institutions within its remit, its jurisdiction, can behave themselves both as to financial stability, but also as to what I call compliance issues and their broad behaviour, so as not to then fall within those that have been labelled by Ken Hayne as being parties that have engaged in misconduct. Now, that's the sort of thing that we'll be having a look at, and hoping to work in this review to be able to provide recommendations and advice to APRA as to how that might be done. But look, it's still early days, so I can't comment upon the review.
Can I specifically ask you about APRA in terms of regulating superannuation funds and making sure that the member first priority does actually happen? Ask you what you think of the developments in the last week or so around pushing from some quarters, including union quarters, to put pressure on industry funds, to then put pressure on corporate boards to hike wages, and the extent that there might be a conflict of interest between that and returns to members.
Well, you know, it's interesting. We talk of industry funds as being union funds, but actually they're not. They're partnerships in most cases between those that are working, that is the unions, and employers. And there is, in most cases, if not all, an equal divide, 50-50, then with 1 or 2 or 3 independent directors. So I don't think we should just look at industry funds as being union tools for being activists in the corporate arena. These are issues I think that will come out. I must say I'm not totally opposed to superannuation funds generally, like any investor, being an activist in terms of the activities of the companies they invest in. After all, for years we have accepted that many investors will not invest in companies that, for example, trade in tobacco products. Some won't invest in companies that are involved in gaming or the like. Others are now taking a view that they won't invest in companies that are heavily involved in fossil fuels in one form or another. So we do see that activism occurring, and that's the right of any shareholder to do that. It's equally the right of other shareholders that don't agree not to invest in those companies and to invest their money elsewhere. elsewhere.
Can I ask you finally about the ACCC's digital platform review? Now, I know you don't really approve of regulators doing reviews, but that said, I mean, the world is watching. What do you make about the arguments now about the lack of competition and particular companies like Google and Facebook, Google being the gatekeeper with its search engine? How would you approach this review?
I'd approach it with a lot of caution, I have to say, because we do get vested interests, and News Limited is pursuing a strong campaign at the moment in relation to this matter to seek a regulation of Google and Facebook. In fact, there have been suggestions made elsewhere that they ought to be broken up. And I'm very, very cautious about vested interests and the arguments they put forward. The issue seems to me to be this, that we have known for many years, some of us predicted back as early in the last decade, that competition was going to come from the internet in the broadest form. And there were many who stuck their head in the sand and said, well, we don't think it'll happen. And when it does happen, it doesn't matter, because people always want print news and the news in the way it's always been done in the past. Now, Google and Facebook are very large corporations. They took advantage of, they had the vision to see how technology and disruption might occur, and they've built themselves very large. But we also need to...
Yeah, well, they've got the lion's share of the advertising now.
Well, of course they have. But look, I do remember when I gave a speech at the National Press Club in 2005, predicting that some of this would occur, that I had many people saying, look, Graeme, you're 30 years ahead of your time and you've got no idea what you're talking about. In fact, it turned out that I was about 2 or 3 years ahead of my time. But it was all about saying, watch out those that are in traditional media. There is going to be a challenge. And in the event, that's what's occurred. The most important thing, it seems to me, is, and we seem to forget this, is that the software of journalism, the software of what consumers want, is really good journalists. There are those that will produce really good journalism, and they will be in demand, and that will be the role of a segment of the media. And in the end, you've got to leave it, in many respects, up to the consumer to determine what's fake news, what's poor news, and what's quality news and quality comment.
Graeme, Samuel, so good to get your views. Thank you very much.
Thanks, Ticky.
Hopefully that means we're all in demand for a while yet. Now, after the break, we'll get the latest market moves with Michael McCarthy from CMC Markets.
You're watching Ticky on Your Money. Now, back to Ticky.
Yes, welcome back. Let's move to markets. A choppy week for the ASX 200, down 0.5% overall. The index closing pretty flat today, up 0.1%. Well, here to talk us through the week's big market moves and all the action. I'm pleased to welcome Michael McCarthy, Australian Chief Market Strategist at CMC Markets. Quite a lot of strategy going on, you have to say, Michael.
It's been a busy week, Ticky.
Now, let me go to where strategy just doesn't, there seems to be a strategy vacuum, Brexit.
A lot of uncertainty there.
Now, how is the market treating these as the clock is ticked down, as we say, to the 29th?
Well, there's been enormous volatility, particularly in the British pound this week against the US dollar. Huge swings there. We've traded in a range between roughly 130 and 133. And while that doesn't sound big, the number of times that the pound has retraced that range has been extraordinary.
Anybody made any money out of it?
Well, big wins and big losses when you see that sort of volatility. It's high risk, high reward sort of stuff, but it's a good fill-up. Currency traders have been looking for some volatility for a long time. And the serial nature of it, a vote each morning, our time, usually before the markets really got going.
Wow, I hadn't thought about that side of it, actually.
Plenty of opportunities there.
Yeah. OK, but generally, we are still really no clearer as to how this is going to pan out. Does the market mostly think there will be some kind of delay?
Oh, absolutely.
Yes.
Almost guaranteed that happened. Once the Parliament had rejected a no-deal Brexit, which was a positive for the markets, it was inevitable there would be a delay, because at the very least there needs to be a short delay to try and get some agreement around a package. Yes. The reality is, I think that we're going to see a long delay here. Markets generally don't like uncertainty, but the choices here are pretty clear. Move the two groups together, the EU and the UK Parliament together,
yes,
which seems unlikely given how far apart they are,
yes,
or go back to the British people. And there are echoes here of the whole Republican debate in Australia, because when the government forced a referendum not on whether or not Australia would become a republic, yes, but on what model of republic they would become, yes, the vote came in no.
Yes.
And so if the British people have to vote on a particular model of Brexit,
yes,
the answer might be different this time around, assuming that's what happens.
You think. Whereas I think that in a democracy, you ask people a question, and if the answer comes back in a way that you don't like it, well, that's tough. That's what the people have
I was
said.
furious in '98, and I agree with your outlook.
Well, anyway, we'll see. I think your analysis is very, is right. That's the most likely thing. Now, let's get to some stocks here. Well, actually, internationally, Boeing. That's been a terrible story. But as some of the commentators have been saying, it is big enough, potentially, to take a hit like this. But what a hit. Well,
the quote of the week, I thought, was that air crash investigators don't believe in coincidence. And when two planes go down in very similar circumstances, there's real concern. Having said that, the investigation is nowhere near complete at this stage.
No, they've just got the black boxes, I think, today. Yeah.
Yes, they went off to France, I believe, for analysis. So until that comes out, it's very difficult to say. But of course, the share market needs to know now. And in that light of that uncertainty, we've seen Boeing's share price plummet from around $440 to 360. Yeah. So a pretty swinging loss there. Yeah. It has stabilised over the last little while, despite all the bans that have gone in place.
Our big banks, CBA and NAB in particular, interesting how they're handling the Hayne Royal Commission.
It is, Ticky, and this is, I think, one of the an illustration of one of the laws of unintended consequences, because we've heard from CBA this week, and they've told us they've put on hold their plans to divest their wealth management businesses. Now, this conflict between being the manufacturer of wealth products and the advisor on wealth products seems to be at the heart of the Royal Commission, yet there were no specific recommendations. Now, CBA...
And the vertical integration stuff was just left
alone. Yeah. So, and CBA have said this week, well, we're putting that on hold while we deal with the immediate issues that have come out of the Royal Commission.
But do you think possibly they're putting it on hold to say, well, look, we don't want to go back to just the teller business, which is going to be eaten away by online stuff anyway. Maybe if we have this wealth here, here's a growth option for us.
Well, it'd be cynical of me to say so, Ticky.
Would it?
But yes.
That's what I was saying to Leo Shanahan yesterday. I reckon they've got a foot in both camps there. And also, Phil Cronican, as the new chair of NAB, was responding, wasn't he?
Well, he's taken a positive approach to a similar issue, and he told the market today that they've already dealt with 26 of the 76 recommended areas of action from the Hayne Royal Commission. That's a tick, including a redefinition of small business, which is very important for those small business owners.
Yes.
However,
in their favour or not?
In their favour. So previously the definition was 3 million of a small business, or less than 100, less than 50 employees. I think they've now moved up 5 million and 100 employees. So, so that's expanding the net that's covered, because the protections for individuals and small businesses are much bigger than they are for larger businesses. Yeah. So that helps.
Mike, we don't often talk about gold, but boy, there's been some action, hasn't there, in gold stocks?
Well, two of the world's largest gold stocks, Newmont and Barrick, are in a takeover contest, and it's a question of who's going to eat who in a sort of Pac-Man style battle over there. But locally, yes, we heard this week that Newcrest have spent $1.14 billion on what they call a porphyry gold deposit in British Columbia in Canada, on the very west coast of Canada.
Yes.
Now, these deposits are huge and they're very low grade. It's estimated that the grade here is about 0.35 of a gram per tonne.
Not pannable.
Taking our picks over there would not help us, Ticky. But
the guy who runs Newcrest, Mr. Biswas, is that right? I think he's quite reluctant to do any TV interviews, certainly at this stage. But it's seen by the market as a pretty good.
Well, there are questions now. Newcrest have experience with a particular kind of mining.
Yes.
Cave making, I don't know the name of the process, at their Cadia mine in Western New South Wales.
Right.
So they are proposing the same method of mining this deposit. So it should be successful. And of course, the copper component to this is also an important part of the economics of it.
Right.
So I think overall the market will give it a tick, despite the fact that it is a little controversial, highly intensive and potentially higher risk.
All right. What about API? And Sigma?
Well, yeah, here's another battle.
What happened there?
So Sigma have, after the loss of that big contract in South Australia last year, were looking at all sorts of options. One of them was to shrink to greatness, seems to be in vogue in Australian business at the moment, but another was to seek a partner, and API pounced. Now, API made a cash and scrip bid, a little bit cheeky, a little opportunistic, but good on them. Sigma today have knocked it back and said that they've done a study if they put the two businesses together, the combined business would save around $60 million in synergies. Sigma have come out and said they can identify more savings within their own business. Now, API naturally have called spoof on that one, but we won't know the truth of it until we see the next result from Sigma. Lots happening.
These takeover deals, can't you? And all this grandstanding. Right, OK. Talking to, I'm hoping the Trade Minister shortly, the China-Australia relationship, and in particular some of these trade deal delays, Michael.
Well, that's right. I mean, Australia's economy is a bobbing cork on the global economic ocean.
Yeah.
But we remain very much affected by what's going on here. Now, we've had a lot of developments over the course of this week. We heard reports earlier in the week that a planned meeting in the US at the Mar-a-Lago resort between the President of China and the President of the US had been delayed. Now, frankly, that just makes sense. Markets have got way too optimistic about the potential for a deal here, given the complexities and the number of issues that need to be dealt with. So the idea that we were going to see a completed trade deal sometime last week or this week was frankly nuts. But there is willing on both sides, and it's likely they'll strike a deal. And today we haven't heard the news yet, but it's almost certain that the National People's Congress in Beijing will endorse a new law around foreign investment, and that law will address a lot of the key issues that are sticking points in the trade negotiations.
Oh, really?
Yeah.
In what way?
Including things like the requirement to have a Chinese partner on the ground, intellectual property issues, the alleged forcing of transfer of technology when international companies want to do business in China.
Well, that's key, though. That is absolutely fundamental, as I understand it.
Now, it's not a clear case. A number of criticisms have been made of this proposed law because it's been typified as a set of intents rather than rules by which people will operate by. But nonetheless, in China, I think that's good enough. So, and it will certainly, I think, be seen by the markets as a positive step towards reaching agreement. So when we hear that announcement, which should come sometime in the next few hours, we might see a positive market response.
OK. Michael, I was really interested yesterday. We had that announcement of a merger between KPMG and the insolvency firm there. Now, one of the things I was asking Matthew Woods from KPMG was just what sort of companies he's been working on. He said, well, I can't say specifically, but quite a few retail businesses. Yeah,
well, that just makes sense, doesn't it? We know that there's a lot of pressure, both cyclical and structural, in the retail space. So that makes perfect sense. Having said that, there are people who are finding a way in what is a very difficult environment right now.
Yeah. Well, we look back to the Myer results recently. Have they, do you think, has the market settled on that?
I'm not a believer on that. The market did respond very well. The shares traded up from 30 cents up to about 46. They're holding at those levels. So there were signs of hope. And you know, that 19% growth in the omni-channel, the online selling, is their main hope, I believe. But sales did still decline despite that growth in online. So
we've got Premier, of course, coming up. We've got Premier results coming up. And Solly Lou's company.
Well, they've been one of the performers too, and their approach, a stable of brands without a huge bricks and mortar commitment or a very selective bricks and mortar commitment, seems to have paid off over the years. So it'd be fascinating to see if that's still the case or if they got lucky previously.
The other thing I think has been really interesting in the last sort of few weeks has been the power of the miners, the big miners, BHP and Rio, hasn't it? As an investment.
Oh, absolutely. I mean, somebody who has been a beneficiary of that, I applaud their work. and I mean, it's unfortunate that the current strength in iron ore prices, which is driving a lot of this, has been because of the disaster in Vale's mine in South America. But the reality is iron ore had already turned the corner a long time before this happened, and other industrial commodities like copper, aluminium, zinc, lead had a 4% run the other day. These are all and crude oil, of course.
And crude oil.
These are all suggesting that the demand picture is much more robust than the headlines and some analysts would have you believe. And it's very clear looking at the charts of all of these commodities, so this is a coordinated move across industrial commodities, they're all looking a lot better. And the trend is up. So...
Well, how very nice to end. I think a lot of my interviews today are ending on an upbeat note. That's fantastic. Very nice. Michael McCarthy, thank you very much for that run around. Really interesting. Now, after the break, we'll get a trade update from Minister Simon Birmingham next.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Well, a couple of technical problems and we'll hopefully bring you our interview with the Trade Minister a little later in the evening. But in the meantime, Huawei is one company at the heart of the tech war between China and the United States. Now the Chinese telecom giant is pushing back. It's filed a lawsuit against the US government last week, challenging a law that bans federal agencies from using Huawei products. Washington says Huawei equipment could be used for spying. Well, here's Huawei's founder and CEO, Ren Zhengfei, giving his first interview since the suit was filed.
A counterattack from Chinese tech giant Huawei. Its billionaire founder and CEO, Ren Zhengfei, sat down with CNN for a rare interview with a clear message. Huawei is not the national security threat the Trump administration says it is.
His tactics are wrong. If he intimidates a country today, threatens a company tomorrow, or wantonly arrests someone, then no one would dare invest in the U.S.
Huawei, China's largest telecom company, is facing an all-out assault by the U.S. and in Europe. Federal prosecutors have accused it of stealing trade secrets from T-Mobile and violating sanctions on Iran, which all led to the arrest of Ren's daughter, Huawei CFO Meng Wanzhou, in Canada. But chief among U.S. concerns that Beijing could use Huawei to harm U.S. national and economic security.
The prosperity that drives our economic security is inherently linked to our national security. And the immense influence that the Chinese government holds over Chinese corporations like Huawei represents a threat to both.
The FBI also says they've obtained emails revealing that Huawei offered bonuses to employees based on the value of information they stole from other companies around the world. The U.S. has banned Huawei products from use in federal agencies and 5G networks. Ren says that's unconstitutional. Huawei is suing the U.S. government over the ban. But if the United States clearly feels that Huawei products are a national security threat, does the United States not have a legitimate right to protect its own interests?
They have to have evidence. Everybody in the world is talking about cybersecurity and they are singling out Huawei. What about Ericsson? What about Cisco? Don't they have cybersecurity issues? Why is Huawei being singled out? There's no Huawei equipment in the U.S. networks. Has that made the U.S. networks totally safe? If not, how can they tell other countries that your networks would be safe without Huawei?
To date, the U.S. hasn't produced public evidence of Huawei spying on China's behalf, but says it could easily happen. If Beijing demanded access to Huawei equipment, the U.S. says the company couldn't say no. Ren says not true.
I'd rather shut down the company. In our 30-year history, we have never received such requests. If there are future requests, I'm making it clear today, I'll firmly reject them.
That hasn't stopped the U.S. from lobbying governments to shun Huawei, a huge player in building up 5G, the next generation of mobile networks worldwide. The U.S. told Germany this week that if it uses Huawei 5G equipment, it would limit intelligence sharing between the countries. Huawei is a company worth hundreds of billions. It's one of China's national champions, and it has global ambitions. For the U.S., that makes it a target. By suing the U.S. government, Huawei says it's ready for a fight. Matt Rivers, CNN, Shenzhen, China.
And from US business to US politics, supporters of Bernie Sanders fear he may be the victim of his own success, with many of his positions adopted by other Democratic candidates in 2020. Former Vice President Joe Biden is yet to declare, but many view him as Sanders' biggest obstacle on the way to the nomination.
2020 presidential contender Senator Bernie Sanders is making his rounds through key early states like here in Iowa to win over caucus goers.
Iowa, you helped begin the political revolution in 2016, and with your help on this campaign, we're going to complete what we started here.
His supporters are hoping they don't have to feel the burn of losing the Democratic Party's nomination a second time in a row.
The last election was not fair. There were missing votes, collusion, whatever.
It wasn't cute, but we're here now, and all we can do is move forward.
Supporters note many of the issues Sanders pushed for in 2016 are now being echoed by other Democratic contenders this go-around, which can make it hard for his message to stand out.
All of a sudden, when Bernie is nailing all these points home, you know, now they change their position. They want Medicare for all. They want their own Green New Deal.
Others disagree.
He's the original supreme progressive candidate.
Sanders is currently running neck and neck with former Vice President Joe Biden in a recent Iowa poll, raising the possibility Sanders could lose Iowa again, like in 2016.
Biden will be his biggest opponent in the Democratic Party. That's the choice the Democrats need to make, is do they want to go very liberal, actually socialist, or do they want to kind of stick with true and try?
But Democratic strategists believe Sanders has one key ingredient that pushes him ahead.
Bernie Sanders has an army of zealots. It's something few candidates can claim. I think what's most significant about the first couple of weeks of the senator's launch is something like 40% of his donors are new donors.
Senator Sanders is already beefing up his organization here in the Hawkeye State. The campaign announcing this week it's hiring senior campaign staff to help win over caucus goers.
Well, let's go to the Trump investigations. A top official has stepped down from Special Counsel Robert Mueller's team. In the latest sign, the investigation is winding down. It comes as the House voted to encourage the Attorney General to release Mr. Mueller's report to the public after its publication.
A spokesman for Special Counsel Mueller confirms that top prosecutor Andrew Weissman is stepping down in what may be the latest clue the Russia investigation is winding down. But the timing also reflects that former campaign chairman Paul Manafort's sentencing is now complete in D.C. and Virginia. Weissman was the lead prosecutor. And Weissman was also in court today as political operative Roger Stone learned his trial date is set for November 5th.
Thank you, ladies and gentlemen.
The yeas are 420. The nays are 0.
On the House floor, with rare bipartisan support, lawmakers voted in favor of a non-binding resolution to encourage Attorney General William Barr to release Mueller's full report to both Congress and the country.
A vote for this resolution will send a clear signal to both the American people and to the Department of Justice that Congress believes transparency is a fundamental principle necessary to ensure that government remains accountable to the public.
The special counsel statute, known as 28 CFR 600, mandates that Mueller send a confidential report to the Attorney General. During confirmation hearings, Barr laid bare his interpretation, telling lawmakers he would summarize, not send Mueller's findings to Congress, and release as much as possible to the public.
Former Texas Representative Beto O'Rourke is the latest Democrat to throw his hat into the ring for the 2020 presidential election. The official announcement from the former punk rocker and his wife came in a video posted online.
Amy and I are happy to share with you that I'm running to serve you as the next president of the United States of America.
After months of speculation, former Texas Congressman Beto O'Rourke announcing he's joining an already crowded Democratic field.
This is going to be a positive campaign that seeks to bring out the very best from every single one of us, that seeks to unite a very divided country.
O'Rourke is the 12th person to seek the 2020 Democratic nomination. The 46-year-old gained national attention last year during the midterm elections, when his grassroots and social media-fueled Senate campaign nearly upset incumbent Republican Ted Cruz in what's considered a very red state.
I'm excited about it. I think he's a candidate who will bring a lot of energy to the campaign.
And his name stayed in the headlines. In February, O'Rourke leading a march in El Paso. At the same time, President Trump was there rallying support for a southern border wall.
We stand for America, and we stand against walls.
I think he's got a lot of hand movement. I've never seen so much hand movement. I said, is he crazy or is that just the way he acts?
And he's already off to Iowa to lay out his platform, this morning talking climate change with voters.
Not to be melodramatic, but literally the future of the world depends on us right now here where we are.
O'Rourke is currently on what's expected to be a 3-day tour in the first-in-the-nation caucus state, and on March 30th, he'll be holding a kickoff rally for his campaign in his hometown of El Paso, Texas.
A summit to discuss the ongoing trade war between the US and China will not go ahead, with US Treasury Secretary Steve Mnuchin confirming the cancellation. He says more work is needed before further negotiations can take place.
We are working diligently. There's over a 150-page document that we're working on. It will have, if we reach an agreement, a very clear enforcement provision. And as the President said yesterday, we want to get the agreement right. That's more important than the exact timing, but I expect it's something we'll resolve in the near future.
US President Donald Trump expressed optimism about striking a deal, but has warned China the clock is ticking.
We'll have news on China probably one way or the other. We're going to know over the next 3 to 4 weeks. And if that one gets done, it will be something that people are going to be talking about for a long time. And because we have been really taken advantage of for a long time, and now I think China, frankly, they've been very responsible and very reasonable. Let's see what happens.
After the break, a new presidential candidate will discuss the upcoming campaign of Beto O'Rourke with former White House advisor Ed Blakely. Next.
Now, back to Ticky.
Yes, welcome back. Divisions over coal have dogged the coalition for yet another week as Barnaby Joyce led the charge for a new power plant in Queensland. The former Nationals leader was also causing headaches by reigniting leadership tension, while Labor was focused on wages. This is the week in politics.
He was once a vocal supporter.
This is coal. Don't be afraid. Don't be scared.
But now coal is tearing the coalition apart.
These people want a coal-fired power station. They should be allowed to get a coal-fired power station.
The government's job isn't to come along and just build things because we decide we like them.
The Prime Minister slapped down the push by some Nationals to fund a new coal-fired power plant in Queensland.
What we need is reliable, sustainable power.
With coal the catalyst, Barnaby Joyce reignited talk over leadership.
I was elected by the Australian people at last election as Deputy Prime Minister, so I'm not going to have any guilt about, if that does happen, about going back.
I understand what it takes to have a successful marriage.
Under pressure from state and federal colleagues to behave, Mr Joyce cooled the rhetoric.
Maybe it was a misstep.
Not before some tough words from the New South Wales Deputy Premier.
We just want them to shut up.
A divided coalition is a gift for Labor just months out from the federal election. And this week, Bill Shorten put his focus squarely on wages. Labor says it will change the Fair Work Commission guidelines to boost the minimum wage.
What we have to do is give them the tools, give them the guidelines.
Labor is under pressure from the unions who want an 11% wage increase over 2 years.
The ACTU and the opposition are not the same thing.
I don't think Australians want to see their co-workers sacked for them to do better.
It was the income of mortgage brokers that saw the government backflip this week, in the wake of the Banking Royal Commission, which recommended an overhaul for brokers.
We are concerned about the impact on competition.
The government simply kicked it into the long grass as being all too hard for them.
Trudy McIntosh, Sky News, Canberra.
The crisis surrounding the world's largest plane maker has deepened, with Boeing suspending the delivery of its newest airliner. The fleet was grounded worldwide following the Ethiopia crash that killed 157 people.
The Boeing 737 MAX 8 and 9 grounded in the U.S. following the deadly crash in Ethiopia. The U.S. and Canada were among the last countries to ground the plane. President Trump announcing the decision based in part on what the FAA says is the discovery of new evidence at the crash site and new satellite data that shows extreme up and down pitching of the plane, similar to a crash in Indonesia 5 months ago. The president standing behind Boeing, saying the company is working on fixing the problem.
Hopefully they'll figure it out very quickly. It's a big decision. It's also one of our largest exporters. one of our, one of the truly great companies of the world. They have to figure it out fast.
And it may not be long before the MAX 8 is certified as airworthy again. Engineers at Boeing and the FAA are already working on new cockpit software, new pilot training, and new manuals. But on Capitol Hill, some lawmakers say the fix isn't enough. They want answers.
The pilots' reports about the problems in these aircraft are absolutely chilling. Boeing knew about them. So did possibly the airlines and the FAA. We need an investigation.
Meanwhile, dozens of planes remain grounded, with airlines scrambling to reroute travelers. Some folks flying on 737 MAX planes when the grounding was announced say it should have happened sooner.
It probably would have been nice if you'd done it a day or so before, once the UK had grounded similar planes.
It probably shouldn't have taken this long.
The plane's black boxes were flown to France this morning. There's no word on how long it will take to analyze them.
And that is all for the show tonight. See you on Monday at 4:30 p.m. only on Your Money. Thanks for your company.